No audio.
All right, everyone, welcome. We've got a great session ahead, but first, take a moment to go through the disclosures. We'll be jumping in very shortly. Hey, everyone, welcome back. So today, we're diving into a company that honestly doesn't get nearly enough attention for what it's building. We're talking about Sequans Communications. Ticker is SQNS on the NYSE, also listed in Paris on Euronext as ALCPB. Now, real quick before we get into it, I want to be clear, this is purely a research deep dive. This isn't financial advice. I'm not telling anyone to go buy or sell this stock. I'm just sharing what I found and why I think it's worth understanding. Always do your own homework. So, Sequans, French company, founded back in 2003, headquartered in Paris. They're a fabless semiconductor company, which means they design chips but don't own the factories that make them. And their entire focus, like their whole reason for existing, is building wireless chips specifically for IoT devices. Internet of Things. Think smart meters, asset trackers, healthcare wearables, fleet management systems, security devices, all that stuff that needs to talk to cell towers but doesn't need the full horsepower of a smartphone chip. And here's the interesting part. They're also sitting on over 3,200 Bitcoin in their corporate treasury. We'll get to that. Let's start with what they actually make. Alright, so Sequans has 4 main product lines, and they're all pretty tightly focused. First up, the Monarch platform. This is their ultra-low power chip for LTE-M and NB-IoT applications. Think devices that need to last years on a single battery. Smart meters, medical wearables, asset trackers. This has been their bread and butter, and now they've announced Monarch 3, which adds 5G RedCap support. So basically, it gives existing customers a bridge from 4G to 5G without having to redesign their entire product. Then you've got Calliope. This is the mid-range platform, LTE Cat 1 BIS, which handles things like fleet management, point-of-sale terminals, security cameras. A bit more data-hungry than Monarch devices, Calliope 3 does the same thing, adds 5G NRE RAID cap with both FDD and TDD band support. Pretty versatile. Now, the one I find really interesting is the Iris RF transceiver. This is their newer play, a software-defined radio chip that works across consumer, industrial, enterprise, and even defense applications. That defense angle is quietly a big deal if it scales. And then there's the IP licensing arm. They license their RF, analog, modem IP, and their full carrier-grade 5G protocol stack to other chip vendors and OEMs. That's high margin revenue without needing to ship a single chip. Oh, and one huge validation point. Qualcomm bought Sequans 4G IoT technology for $200 million back in 2024. But here's the kicker. Sequans kept a perpetual license to keep using and selling those same products, and they retained 100% ownership of all their 5G technology. That's a pretty sweet deal if you ask me. Okay, so let's talk about why Sequans might actually have a durable competitive edge here, because that's the real question with any small cap chip maker. Number one, they've been at this for over 20 years. They've got deep protocol stack expertise. Their silicon is carrier certified in over 60 countries. That certification process alone takes years. You can't just show up and replicate that overnight. Number two, and this is probably the most important point, Sequans is the only publicly traded pure-play cellular IoT chip maker on the planet. Qualcomm makes IoT chips, sure, but that's a rounding error on their smartphone and automotive business. MediaTek, same story. Nordic Semi does IoT but focuses on Bluetooth and Wi-Fi. Sequans is 100% focused on cellular IoT. No distractions. Number 3, pin compatibility. Their new Monarch 3 and Calliope 3 chips are drop-in replacements for the previous generation. Same footprint, same software stack. Customers can upgrade from 4G to 5G without redesigning their circuit boards. That's huge for customer retention. And number 4, the fabless model keeps them capital light. No expensive fabs to maintain. Plus, the IP licensing creates recurring revenue that doesn't depend on chip shipments. Now check out these numbers on the right. Over $300 million in their 3-year design win pipeline, with 44% of those projects already in mass production. They're targeting $40 to $45 million in revenue for 2026. And then there's the 3,234 Bitcoin sitting in their treasury, worth roughly $220 million at recent prices. That's a lot of value for a $50 million market cap company. Which brings us to the growth story. So here's the revenue trajectory. You can see 2025 was kind of a reset year. Revenue dropped to $27 million, partly because 2024 included a bunch of one-time Qualcomm deal revenue. But the underlying business was ramping. Q4 of 2025 came in at $7 million, up 73% from the prior quarter. They're guiding $40 to $45 million for 2026. And if the pipeline converts, you could be looking at $70 million or more by 2027 and potentially north of $100 million by 2028. What's driving all of this? A few major things. First, US carriers are actively sunsetting their 4G networks. AT&T has stopped certifying new 4G devices. T-Mobile is expected to follow within a couple years. That forces literally billions of IoT devices to migrate to 5G connectivity. And eRedCap is the technology designed for exactly that transition. Sequans is one of the earliest movers here. Second, their RF transceiver business is projected to do about $7 million this year, but the CEO has said it could ramp to $15 to $20 million annually if the customer pipeline converts. That's a meaningful chunk on top of the core business. Third, the overall cellular IoT chipset market is growing at about a 23% compound annual growth rate, projected to hit $14 billion by 2030. So this isn't a niche, it's a massive wave, and Sequans is positioned right in the sweet spot. If they can hit $100 million plus in revenue with decent margins, and you layer on the Bitcoin treasury value, some analysts think the stock could trade in the $15 to $30 plus range within 3 to 5 years. That would be a significant move from current levels. All right, let's keep it honest. There are real reasons to be excited here, but there are also real risks. On the strength side, you've got the only pure play positioning, a massive pipeline, Qualcomm's validation through the IP deal, the Bitcoin treasury creating a net asset value floor, and a clear path to cash flow break even by the end of this year. But the risks, they're still burning cash. The FY 2025 net loss was significant, though a big chunk of that was non-cash Bitcoin impairment charges, not operational losses. The heavy Bitcoin exposure means the stock can move with crypto sentiment, which adds volatility that has nothing to do with the chip business. They're also a small cap with roughly a $50 million market cap, so liquidity can be thin. Chinese chip makers are developing low-cost alternatives that could pressure pricing. And the broader 5G eRedCap adoption timeline is still uncertain. Mass adoption is probably more of a 2027 to 2028 story. Now, and this is where it gets really interesting, the acquisition angle. Sequans has specialized 5G eRedCap IP, a carrier-certified protocol stack that's been validated in the field for 2 decades. And now, this Iris RF transceiver technology. For a larger chip company that wants to fast-track its IoT portfolio, buying Sequans could be way cheaper and faster than building all this in-house. Who could be interested? Qualcomm is the obvious name. They already bought the 4G IP. They know the technology inside and out. MediaTek could use it to expand their IoT footprint. Renesas, which has been on an acquisition spree in industrial IoT, would be a natural fit. ST Microelectronics, being a European company, could pursue it as a consolidation play. And then there's Semtech, which acquired Sierra Wireless and might want deeper silicon capabilities. So here's the thesis in one sentence. Sequan is a rare pure play bet on the inevitable 4G to 5G IoT transition with validated IP, a growing design win pipeline, and Bitcoin treasury upside, all at a micro cap valuation. You've got 3 pillars here: the semiconductor business, pure play, 5G IoT chip IP with a $300 million plus pipeline, the Bitcoin treasury, over 3,200 BTC providing a net asset value floor and potential upside, and M&A optionality. They're a genuinely attractive target for any major chip company looking to buy rather than build. Is it risky? Absolutely. This is a microcap that's still burning cash, has crypto exposure, and is betting on a technology transition timeline that's not fully in their control. But the risk-reward setup is what makes it interesting for research. Again, this is not investment advice, just research I wanted to share. Do your own diligence, talk to your financial advisor, all that good stuff. If you found this useful, subscribe to the channel for more deep dives like this. Drop a comment below if you have questions or want to see a follow-up on this one. See you in the next one.